today on this, Wednesday Hump Day, April 9th, 2025. I want to thank everybody for being here. Thank you very much. Hey, good morning, Roger. Let me turn something off here. There we go. Hey, good morning, Roger. Hey, JW, good morning. Joe, good morning. Bill, good morning. Good morning, everybody. Hey, Jim, good morning. Thanks for being here, Jim. Devendra, thanks for being here. Good morning. Hey, Gold, thanks for being here. Good morning. Good morning, everybody. All right, let's gather around the water cooler, huh? Crack some donuts open. Hello, Nate. Everybody get your coffee, your Bloody Marys, whatever you're drinking. Okay, so, the tariff mess still is lurking. Bears still have the market. Jamie Dimon says that we're likely to go into a recession. So, you know what? Let's grab those Bloody Marys and enjoy our morning, enjoy our day. Go fishing where you can. Hey, Vernon, good morning. How you doing over there? Thanks for joining in on YouTube. Appreciate it. So what I've got here is, here's the low. What is this? Friday, Tuesday, Monday. So Monday's low, I've got that boxed in from the low, and this top up here boxed in. So bottom line, the market, if we're going to see some big turnaround, we're going to need to see the bulls break out of this area up here. Bears, they're going to need to break, that box. My next target to the downside is going to be this 460, 90-ish area. And this is the 50% retracement of the recent top here and the 2022 lows. So that's what this is. This is the same as this 50% retracement right here. I've just add just one line rather than do it this way. Keep the chart a little bit cleaner. We were talking in the trading room yesterday, and at some point, I suspect something is going to change with the tariffs. Something's got to give. Something's got to break. So I think the best thing for the market, the thing to break would be somebody calls uncle. And when somebody calls uncle, I think that will flatten everything out, relax everything. And I think the market is going to rally up big time. So that is the bet that I'm going to be taking. Not that I'm buying a bunch of longs on anticipation of that, because I don't know when that'll happen. Could be today, could be 30 days from now. Who knows? But until then, I think the best thing to do is stick with some old-fashioned, just follow the trend. There's the trend indicator right there. That's just a moving average for those that don't know. I've switched back to the 17 for those that were, a couple of weeks ago, I was using the 21. And the truth is, there is no difference in the last couple dots, whether you use the 17 or 21. The difference is in the, the kind of the hump at the top or bow at the low, something like that. That's the only difference. So neither one is magic. It's just a matter of which one do you choose, and consistency is what is important. And then the black line is the T line. Of course, candlesticks are price. So what we've got is price below the T line below the trend indicator. We have a bear trend. That trend is not bullish until that trend is in fact broke. That's something that, and it doesn't matter what your trend is. If we didn't argue about, well, I like this trend better, or, my trend's better than your trend's better than my trend. If we just don't argue about that, and if we just say, is it better to wait for the trend to change? Just about 100% of all traders would say yes, just about. There's always going to be those eyeballs out there, that's cramming in, trading right in here. There's always going to be that. But if you follow the trend, you'll be better off. So if you're looking to be long right now, I think a little patience is needed. If you're looking at your 401 account and you're thinking, oh my gosh, I've got to do something in my trading, I would take a time out with that. Your 401 is something that's totally separate than your trading, and they need to be treated very, very differently. So Don't bring, the 401 blues. That's what we need. We need to get some blues music here, don't we? Stock trading blues. We need. I'll work on that. So, what we need is for that trend to change, and there's always going to be those early birds in there, and that's just always going to be that way. But right now, the trend is still down. If you look at SMH, there is nothing bullish about SMH. One thing we're doing in the room that, hey, MW, how you doing? Hello, Lee. Glad you're here. Thank you. Thanks for being here. One thing we're doing in the trading room is we're compiling a list of, hey, Joe's a good one, isn't he? Yeah, Roger. He's got some good blues. I'll see what I can do about getting some blues. Yeah, stock market blues. I'll work on that. Anyway, sorry. We're compiling a list of good quality companies here in the trading room, and we'll share that with everybody. That's no big secret. And what we're looking for, a basic type of chart pattern, are charts that are beat down like this, where they put in, let me draw on this. We're beat down very much in the oversold area. We have a low. We want to establish that low, and then we want to be off the low, and then maybe a test, and then we're looking for that, something like that right there, where we take out the high of the highest high or recent high on the price action. And that could set us off, because what that does is it starts to set up that trend. But until that happens, it hasn't happened yet, okay? So we want to wait for this sort of setup to happen. And right now, SMH, it's sort of entering that area, but we don't have the confirmation, and that's what we need, is the confirmation. If we take a look at IYT, IYT, man, we've tested that low, that low, that low. Talking about an important little level down there. What is that? Good grief. Say 54. So we break through 54, then, we're headed lower. It's really simple. I'll look here after the market opens for, targets to the downside. But right now, the sellers absolutely have their way. We're very, very oversold. It's kind of hard sometimes to justify that short in there, but there's still those shorts there. Qs, you can see that we're holding. Well, that's another thing. We only get the chart in front of us, and the Qs are holding right here. So until this line gets broke, that low, that 402.60 area, until that line gets broke, I'm going to assume that's the low. That's the bottom. The minute it breaks, it is no longer the bottom. And while we do not want to be bottom pickers, that's just not a healthy thing to do on a regular basis. Everybody does it, but on a regular basis, to be a bottom picker is pretty doggone dangerous, because you don't know when that trend will be over. So, for instance, if the tariffs continue, if my truck's bigger than your truck, no, my truck's bigger than your truck, we keep raising the truck size, then we're just going to see more pouring to the downside, because this is clearly not something the market likes. So, like I said, something's got to give. And if it doesn't give, we're just going to see more downside. Follow that trend and be patient, I think, is the key thing here. Okay. So, sorry, I could preach on this for quite a while, and I don't mean to. I apologize. Does anyone have any charts you want to look at? If you post them out there, I know that a few people are watching Tesla. I'm watching Tesla. So the big question is Tesla going to fall through this 222.80 area? If it does, there are plenty places down below that it could drop down to. One of them would be about this 184 level here. So if we do drop out of this box to the downside, 184, I'm actually going to take that box and lower it a little bit. There we go. If we drop out, I'm going to look at 184.90. If we can manage to get back up there, that's a lot of real estate right there to move. Okay. That is a ton of real estate. So, but if Tesla could manage to get through that real estate and cross the street right here, excuse me, get across the street right here, then Tesla just might get going. But right now, the sellers have control with that. Apple. There's nothing to say that this is the low on the Apple are going to hold anyway. I mean, it is in fact the low as we speak, but there's nothing to suggest it's going to stay there. We need proof there. We need the bulls to step in, and I don't really know why that's there. There you go. I think what we need to do is clear that area right there. So we start moving above 192. That might show that some bulls are are interested, and there's enough there to actually put Apple back in the game there. Okay, let's see. I'm gonna start from the bottom over here. AVGO. Let's take a look. AVGO is one of those that is in fact on our good quality company list. And if you look, we're bouncing off the 500 period moving average. We've got a low, we've got a high. So far, we have a higher low. So what I'm going to do is put that box right here and go down to those lows. In this box, this is just junky trading. This is traders swap and punch, swap and spit, whatever they want to swap. To be bullish, we need to break out of the top. To be bearish, we need to break out of the bottom. But anything in here is just junk trading. But it doesn't mean that somebody can't buy this. You know, betting on the long, perfectly fine. You can buy in here betting on the short. But bottom line, you need to break out here or break down below on that one, okay? Thank you. PANW. You know, I don't think that one's on our list, and I'm going to add that. PANW. Thank you. So this is another one doing that same sort of thing. Here we're down, and we're quite oversold, and we're over right there at that 500 period moving average. So what we have here is our low, and there's our high. There's our box. We need to break out of that box to be bullish, break down to be bearish. Anything inside here, great for day traders, scalpers, or just whatever, you know, swapping punches, whatever you want to swap there. All right. Does that make sense, Steve? Let's see. Hey, good morning, Hydro. How are you? Let's see. Hey, John, $1 million question. Do we continue to dance in the zone? Someone cries. No, we're not going to continue to dance in the zone. I think what's going to happen is if the tariff, you know, if everyone keeps raising tariffs, we're just going to go down further. It's just going to bleed the market further. If everything was quiet for a while, I believe the market would kind of flatten out maybe, and all the market is doing is waiting for that. You know, did somebody go buy a bigger truck, or did somebody cry uncle? And that's simply what's got to happen. Somebody's got to cave in. Otherwise, you know, we're just going to keep bleeding. If the, you know, it's just like boys on a playground. It really is, you know, and that's what's happening. So let's see. Somebody already wrote, Stefan. I'll take those words. I'll see if I can put some blues to it. Thank you. I'll copy those off here in a little while. We've got somebody in the room that's already put words to a trading blues song. We'll see what we can do with that. Let's take a look at NVDA. I know that's one that a lot of folks are watching. And here's another one. You know, I'm going to actually raise this up. There we go. Here's another one bouncing off the 500 period moving average. Below that, I would be definitely looking for a short. We start to break out of that box, I'll start looking for a long on that. Pretty simple. Trading, truly, 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 the mechanics of trading is quite simple. Everybody can see it on the chart, but what happens is it gets in your head, and your head starts to mess with it a little bit. So be a little careful with that. I do want to remind everybody that cash is a position. Okay, cash is a position. If we take a look at VXX, I mean, look at this thing. It is smoking, parabolic. Look at yesterday. Look at that candle yesterday. Wowzer. And it looks like today we're kind of holding in there. If we take this to a 2-day chart, let's go to 3-day chart. I'm just trying to make it so you can see it. A weekly chart gets can't really pull everything into it. 3-day chart. So a 3-day chart, you can see we're challenging that 200 period moving average right now. And I'm going to put a line right here. So right now, if we can find support above that 200 period moving average, or this 84.70 area, if we can find support there, 107 a quarter, I mean, that comes up over here on what 2003. We have a little top right in here, and what I did is I pulled that 50% retracement from Marchish on 2023. I said 23. Marches, I pulled that top down to the low, and the 50% retracement for VXX is sitting around that 138.50 area. And I got to tell you, that's for real. I mean, that's possible. That's some possible numbers there. Sorry, I can't find a happy place. There we go. We're going to see. I don't think it's just going to go straight up. I don't think that. But we're going to see some, pullbacks like this. And if the tariff business continues, well, this is what's going to happen. Fear is going to be in the market, and fear is going to rise, and we're going to run up. And this 50% area, if things continue the way they are, this is very real. So be prepared in your account, okay? Be prepared in your trading account. Again, remember, if you're struggling, cash is a position. There's nothing wrong with that. Sit back, don't lose your money, because this will pass. This will pass. Hey, Terry, how you doing? WMB, let's take a look. So WMB here, until I get a buy signal, all we've got really is this sort of bouncing off the, there we go. Just bouncing off the 200. So, I mean, I can't say that that's a buy right now. I can tell you that's where the consolidation is. This, we're down. This candle was down. You have to remember that. This candle looked just like that candle at one point, down. And then the bulls came back. So we've got our low. The bulls came all the way up to the 50 period moving average. And now we're back down here. So that makes this low, this high, this higher low, the area that, is it creating a bottom, or is it creating a bear flag to break down? So bottom line, unless you're a fast trader, unless you're a trader that just has some belief in here, to be bullish, we need to break out, and to be bearish, we need to break down. So that's what I see in WMB. Let's go look at USO. What is that doing now? So USO has been down. We're trying to put a little hammer in, but a hammer doesn't mean it's a bottom. To start with, this is a daily chart, and we need to wait till that daily chart is finished before we can judge that candle. You can judge it on an intraday time frame when that candle finishes. So 5-minute, when that candle finishes, you can judge it. 20-minute, half hour, hour, whatever, 3-bar chart, you can judge that candle when it finishes. So anyway, USO is still down. Let's see. Looking on the scanner here, PM is looking like a bear flag. That's actually looking pretty good. Let's write that down. PM looking like a bear flag. I'm sorry, bear flag, and a blue ice failure. So we've got a shooting star going on up here. We have some follow through below the 50 period moving average, and it looks like we're, just kind of walking along the bottom of that 50. So we start to break down. PM is going to look like a pretty good short, and I would look toward the dotted deuce and then maybe the 200. If we start to cross that back up over the trend indicator and turn that green, that will give us a sign that the bulls are trying to step back into PM. But right now, that's looking a little bit bearish. Hey, Chip, your favorite indicator, WTF. That is a fun one, isn't it? WTF. New issue out there. We're just kind of flat, running flat right in here. If we started to break out over that high, I could see that being a buy. Otherwise, watch the lows. Yeah. Yeah. Well, yeah. Yeah, I know what you want to call it. Hey, THB, you're looking at PBF. Is that PBF? PBF, yeah. Still short. Watch list, accumulating huge insider buying. Yeah, and evidently it must not be too big. Okay. I'm only saying that because where's the bullish candle? Must not be big enough to create a bullish candle. So certainly one for the watch list, but I would certainly watch for that buy signal on that one. And then you've got another one there, tallow. Whoops, that's not it. Tallow. There we go. Yeah. So tallow's up. We still need that low, high, higher low. You need that reason to be a buyer. This might be a condition. We're down. Let's look at the weekly. Yeah, there's nothing here. Maybe a little, maybe we can talk double bottom here. But a double bottom is not a reason to buy. It's a condition to buy. So here's where, if you look at these two candles, this is where the buyers and the sellers, they had an arm wrestle. My truck's bigger than your truck's bigger than my truck. All that is a tariff war between 2 days in candlesticks. That's all it is. So what we need to happen, and right here you can see who called uncle. The bulls called uncle, and down we go. So what we need to see is this to come back up and clear that candle to prove that the winner is the winner. So anyway, let's see how today rolls out. Yesterday, I had some ridiculous dreaming idea that we were going to close back up over the 500 period moving average. Maybe that happens today. If that does, that's going to give everybody out there a lot of hope in the market. Don't get suckered into it. Be careful. Because really, even if we close over that 500 right here, we haven't taken out these highs, and I think that's what we need to do first. And then we're going to have the horror of the 50% retracement area, and that's a known rollover place. Now, if we get on top of that, that is a known support area. So anyway, about time for me to wrap it up. I want to say thank you, everybody, for being here. Absolutely appreciate it. Members of Hit Run Candlesticks, will see you in the room in about 20 minutes, okay? You guys all take care, and thank you so much for being here. Appreciate it. Thanks.